What do you think? I mean, given the lack of reaction, it seems the markets feel it's catch-up, right?
Yeah, I think so. I mean, we saw, particularly in the case of Spain, I think the ratings adjustment that we've seen by S&P just brings it more into line with some of the earlier upgrades we've seen from the agencies. And we've obviously got this big hurdle with the European elections coming up this weekend, so that could be tempering investor appetite somewhat. And also we have seen some recovery from the volatility we'd seen earlier this week and some of the upward pressure on yields. We've come back a little bit. We've had these rating upgrades, we've got the election, so it could mean we're sort of holding here for now.
What about the threat of deflation, Phil? Will the threat of deflation halt this trend of upgrades?
I think that is a real problem going forward. It's obviously something that the ECB is concerned about. We've got expectations being ratcheted up ahead of this early June meeting. But clearly they've got to do something, because the strength of the euro is going to be ongoing, and it's going to continue to put downward pressure on prices. And that is going to be a problem over the longer term this year, despite the fact that we are seeing inflation begin to pick up a little bit. It's still not picking up anywhere near enough, and the recovery isn't gaining enough traction to really erode these fears.
And you know, putting it into perspective, I don't want to sound like a cynic, but you look at Greece, still 5 notches below investment grade. S&P, and that was the Fitch move, S&P and Moody's have got it deep in junk territory still. And yet when we look at yields, I mean, I'm not just talking Greece, I'm talking Spain and the periphery as well. How long can it last this? I know you and I have spoken about this often.
Yes, I mean, I think obviously things are very stretched now, and if we get a reasonable outcome in the European elections for the markets over the weekend, we might well see some further spread compression in some of these peripheral markets. But you know, we are reaching a limit here, I think, particularly if the recovery disappoints later on this year, and the threat of deflation, as I think it will, remains ongoing. And if the ECB does disappoint, because there's been a lot priced in terms of ECB action at the beginning of June. I don't think QE is imminent. We might see some rate cuts, maybe some liquidity injection, but I think that the expectations about QE over the longer term are going to be disappointed for some time yet.